Welcome, everyone, and thanks for joining us today. You're listening to Maggie Tax Advisory. My name is Robert Maggie, and I'm here with my son. You'll be hearing from him, Chris Maggie, and my associate, Kirk Agers. So sit back and enjoy this presentation. We have a lot to talk about. If you want to get in touch with us today, it's real simple. Go to our website, www.maggietax.com. We have a lot of information there that you could look at. Also, if you want to email us, if you have a question, info@maggietax.com. And if you want to call us, we have a real simple number for you, 833-MAGGIE-TAX. That's 833-MAGGI-TAX. My name is Robert Maggie. I'm president of Maggie Tax Advisory. Be joined by my son, Chris Maggie, and also Kirk Agers. We have a lot to talk about today, so get a piece of paper and make some notes. If you want to listen to our radio show, we do a radio show every Saturday morning at 5 a.m. And also Saturday evening at 5 p.m. on 970 WFLA, so tune in and listen to our program. We also have a TV show every Sunday on ABC TV at 10:30. We talk about a lot of different topics, and today you'll be learning a lot about what we're talking about. Office locations, if you want to meet with us, we could also visit us in our Palm Harbor office. We have an office in Lutz, and we have an office in St. Pete. And again, if you go to our website, maggietax.com, all the locations are there, and you can find out which one is close for you. One very important issue, we like to educate a lot of people. We have a book that we wrote, Stop Funding Uncle Sam's Retirement and Get a Plan That's Simple and Easy to Understand. And for all of you, we will give you a copy of our book, no cost. We feel that there's a lot of education that would help you in what we talk about. So if you want a copy of the book, send me an email. We'll be glad to get it to you. One thing I want to make sure of that all of you understand this very important word. It's called fiduciary, and it's important because I've been in this business a long time, my son and also Kirk, but we want to do the best thing for you. It's about education, and when you meet with us, you'll see that we're going to educate you, show you some things that you may not know, and then you can make the right decision because that's what a fiduciary does. Now, again, you can contact us today. Write this down. Visit our website, maggietax.com. We have a lot of videos there that'll help you out. We have an email if you want to send me a question, or Kirk or Chris, info@maggietax.com. And again, our phone number, it's real simple, 833-MAGGIE-TAX. That's 833-MAGGIE-TAX. And don't forget, we take appointments available in person, or we do it over the phone. This has helped a lot of you out there when we talk to come into our office, which is fine, but we can do it over the phone, 833-MAGGIE-TAX.
At Maggie Tax Advisory and Financial Group, we have three different divisions. We have our tax division, we have our insurance division, we also have our investment division. And in our tax division, we take a tax approach in everything we do. We do tax preparation year-round, we do tax audit, we look at your prior year's tax return, we do a tax analysis and come up with tax planning strategies. There are advanced planning strategies to reduce your taxes. We're always looking for ways to reduce it, have more income. Roth conversions we do, stretch IRA, Social Security maximization, and you can always meet with our CPA throughout the year. With our insurance division, we can do fixed annuities, index annuities, life insurance, cash value life insurance. So we're not tied to one particular company. We're independent. So we got to do the best thing for you. We do long-term care, funeral trust, and this is really important, proper beneficiary designation. You want to make sure that all your accounts are properly designed to pass where you want it to go. With our investment division through Maggie Investment Services, we can manage portfolios. We can do conservative, moderate, aggressive. We can do different types of portfolios to manage your investments. We also have our estate planning division where we have attorneys that work with us, do wills, trust, power of attorneys, specialty trusts. So as you can see, we do complete planning. If you have any questions in any one particular area, please let us know. But as you see, we do complete planning, and that's what we could do for you. And that's what we call the Maggie Plan. It's simple. It's a plan that you can understand. We make this so easy for you because this is your money. When's the last class you had on how to put together a plan or financial plan? Well, that's what we do here. We do income planning, tax planning, investment planning, Social Security maximization planning, estate planning, Roth IRA planning. This is what we do. So schedule time to meet with us. Let's get together. Let's put together a plan for you because you deserve a plan. And that's what we're talking about here through our website, maggietax.com. Email us at info@maggietax.com. Let us know that you're on the webinar, and we'll definitely take care of you. Or just pick up the phone. Give us a call, 833-MAGGIE-TAX. And again, appointments available in person or over the phone. So let's talk about taxes, because what's our biggest expense? Taxes, right? So this tax reform came into fruition a couple years ago, and a lot of people have questions about this. So let's talk about it. What we're going to address here in the tax section of this is tax returns, what we do each and every day. We read it, we understand it. It's like an x-ray to us, and we can understand how and ways to reduce your taxes. So the purpose of the tax reform, I'm going to just address and talk about what they did a couple years ago, the changes that may affect you, the individual. Now is the time to focus through the windshield. Many people miss out on paying the least amount of taxes possible because they just don't get the advice. The advisor or the CPA that they're currently working with is not showing them strategies to reduce your taxes. So do you want to miss out on understanding the tax reform changes and its opportunities? Of course you don't. If you didn't care, you wouldn't be here today, and that's why it's so important to understand. So we focus on taxes, and that's what we're going to explain to you today. So this was the first major tax overhaul since 1986, and it was a Tax Cuts and Jobs Act of 2017. So that was a couple of years ago, but I want to make sure that people understand what kind of changes it made to your tax return this year and moving forward. And that's what we're talking about here. The new tax law went into effect for 2018, and the changes started in 2019. Each family was affected differently based on the size of the family, the amount and type of income, as well as other individual circumstances. Individual tax changes, they're going to expire in 2025. So that's why now is the time to start thinking about taxes and tax strategies. We mentioned before how we do Roth conversions and creating tax-free buckets. Maybe it's time to do that. Maybe it's not. But it's so important to understand and meet with the right advisor who understands taxes and how it's going to implement and affect your income and your future investments. Business tax changes are permanent. So there are some exchanges there and exemptions there. But if you're a business owner, it's so important to get with us. Let's make sure we talk about your business. The estimated cost of the new tax law was like $1.5 trillion. It's a lot. So let's jump into personal income tax brackets. That's the biggest thing. One of the things that most people are aware of, and they just don't know really how they sit. Well, if you're single, there's the old and the new. As you can see, the tax brackets were 10%, 15%, 25%, 28, 33, 35, and 39.6. And as you can see, if your income was up to a certain amount, then your part of your income fits in that tax bracket. So the highest was 39.6, but it was reduced to 37%. Married filing jointly, as you can see, again, it was 39.6 the highest. The old tax rates, now it's 37%. So if your income, if you're married filing jointly, and you make $170,000, well, you're in the 24% marginal tax rate, as before you would have been in the 28% marginal tax rate. So it actually reduced your taxes. And that's what we're showing here. The old 15%, now it's 12%, so it went down 3% as a tax rate for the income. So reduce your taxes, and many people have seen this in their tax returns when they file more income in their pocket throughout the year. Also, what changed was personal deduction changes. There's the standard deduction, and then there's also the itemized deduction, Schedule A. And the standard deduction pretty much doubled almost. For single filers, it was $6,350. Now it's $12,000 if you're single. So the first $12,000 of the year, your wages are you don't pay tax on. For married couples filing jointly, it was $12,700, and now it's $24,000. So the first $24,000 that you make is no tax. And if you're over age 65 or older or disabled, there's an additional $1,300 per person. And if you're married, $1,600 for single filers. So what we're talking about here is that the number of itemizers is expected to drop from nearly 47 million people to 19 million people who file their tax return. So all those time and all the extra time you spend putting together the charitable deductions and all the other expenses that you have that you usually put on Schedule A, it might be a waste of time for you to put all that together because the standard deduction has increased. But it's always important to meet with the right advisor to go through those numbers and make sure that you are subject to itemizing or you're not. So let's definitely look over that for you and see if you should itemize or just take the standard deduction because it's much higher. But that's what we're talking about here is the exemptions as well. The personal exemptions, it used to be $4,050 per person. It's now eliminated because they increased the standard deduction for everybody. State and local tax, they call it SALT. There's deductions that were capped at $10,000. Mortgage interest, this is a big deal. Current mortgage holders maintain ability to deduct interest on their mortgage up to $1 million, and that's it. New mortgage deductible, limit caps of $750,000 for new debt incurred, and deduction for existing or new interest on home equity, the debt goes away. So there's certain interesting topics you have to look at as far as the mortgage interest and what's deductible. Medical expenses. On Schedule A, taxpayers can deduct expenses that exceed 7.5 of adjusted gross income, or called AGI, through 2018. And in 2019, actually, it goes back to 10%. You have to exceed 10% of the adjusted gross income for it to be deductible if you itemize. And some other deductions that were eliminated, those subject to the 2% AGI limitations, they were gone in 2018. So just some other things that people need to know and be aware of. This is very, very important. Alternate minimum tax, AMT. It's called the stealth tax, the way we see it. It was created to prevent deduction loopholes. And the new tax law will keep AMT. However, fewer people will be affected by this because higher income exemption levels and also phase-outs. So when we're talking about AMT, it's so important to make sure that you meet with the right advisor, because if you're paying tax or AMT tax, there are ways to reduce this or possibly eliminate it. And that's why when you meet with the right advisor and you have tax strategies and tax planning strategies to help you reduce this or possibly eliminate it, you might not be subject to it. So that's why meet with the right advisor. We could definitely help you. What about estate taxes? A lot of people ask us, well, what happens when I die, or what happens if my parents pass away? Am I going to inherit and pay estate taxes? Well, let's talk about that for a minute. The new tax bill will essentially doubles the estate tax exemption. So this is interesting. For 2018, back then, the exemption for an individual was $11.2 million, and for married couples, it was $22.4 million. Well, what happened here is that now, if you exceed that, then you have to pay estate tax. And they're capping out at 40% back in 2018. And remember, 2025 is when they set to expire. So someone who passes away with an estate less than that amount, if you're an individual or you're married, then there is no estate taxes. But what if you're wealthy, or someone you know is wealthy and they leave you a lot of money, then they're over those amounts, then they could be subject to estate taxes. So this is so important to understand and meet with the right advisor, because if you're in this bracket, you want to make sure that you have strategies to avoid or proper planning to help you reduce your tax liability. What about corporate taxes? This bill reduced the corporate tax. It ranged from 15 to 39%. Now it's a flat rate of 21%. So that helped out, reduced a lot of tax liability for corporations. AMT went away for them corporately, and then businesses that have what they call pass-through income, S-corps, may have the ability to deduct up to 20% of their income. So this is really, really important. And again, expires end of 2025. And the goal of this whole tax reform was to spur economic expansion through the creation of new jobs and capital expenditure. And it did. A lot of people have more money into their paychecks. They saw more refunds at the end of the year. But again, it's about expansion, and that's what they're looking to do. So when we talk about taxes, there are ways to reduce it. And that's what we specialize in, is tax reduction strategies. What's your biggest expense? It's taxes. If you have an IRA, 401k, 403b, these accounts are infected with taxes. So what do? When you take a distribution, it's taxable. You have to throw it on your tax return. And that's why it's going to be income. So what we do is we look at your tax return. It's not only about your investments, it's about making sure that you see clear in the future and make sure you pay the least amount of tax as possible. And that's why we look at line 8A or line 9A or 13, capital gains or losses. These are taxable interest, the money you have at the bank if you're getting interest on CDs. What about dividends? Stock accounts, dividends that are being paid to you. Are you taking those interest and the dividends, or are you reinvesting it? Because you might be paying tax on money you don't really receive, and it could be affecting your Social Security. And that's why it's so important to make sure you get a tax analysis, and we can definitely help you there. So when we look at all this, it's important to understand that, as I mentioned before, There's tax reduction strategies. If you have a 401k or an IRA, these are all pre-tax dollars. Withdrawals are taxable when they come out. Roth 401ks or Roth IRAs, well, you pay the tax up front. These are after-tax dollars, so withdrawals in the future are all income tax-free, and there's no required minimum distributions. And Roth conversions, this is what we're talking about here. It might make sense to convert money from an infected area to a tax-free environment. And that's why we think taxes are going to go up in the future. We just don't know when. But again, 5, 10, 15, 20 years from now, tax rates might be so much higher. Your IRAs might be so much higher. But when you start taking money out, you're paying a lot in tax. But our clients are positioned in a way where they have tax-free buckets. So they can control the tax liability, control the amount of income they have on a taxable and also a tax-free way. And that's why when you get a tax review and tax planning strategies, it's so important. So pick up the phone, give us a call. We could definitely help you and analyze your tax return as well as your investments to see how they work together. A lot of people don't understand that there are 3 tax buckets. There's tax-deferred money, there's taxable money, and there's also tax-free money. Tax-deferred money is pretty much 401ks, IRAs, if you're federal TSP, thrift savings plans, SEP, self-employed plans, simple IRAs, 403Bs, different types of annuities, and pensions. And all these accounts are pretty much taxed later. Okay, so you don't pay tax on them now, but you pay tax later. That's tax-deferred. What about taxable? Taxable buckets are pretty much checking accounts, savings accounts, money markets, non-qualified CDs, non-qualified stocks, non-qualified bonds, non-qualified mutual funds, and all these accounts are taxed now. So the interest on line 8A and line 9, you record and report the interest and dividends, and you pay taxes on them now. Okay? Then there are also tax-free buckets. These are Roth 401ks, Roth TSPs, Roth IRAs, municipal bonds, life insurance, different types of cash value life insurance, and CRUTs or CRATs. These are never taxed. So there are strategies that you could put together and be in those tax-free environments. So where is all your money now? Is it in the tax-deferred bucket? Is it in the taxable bucket? Or do you have tax-free buckets? Because if most of your money is in tax-deferred, and with taxes going to go up in the future, and you want more income on it the most tax-efficient way, it might make sense to convert some money from a tax-deferred bucket to tax-free. So that's what we call a strategic rollout, and it's converting taxable buckets to tax-free buckets in the most tax-efficient way. And that's what we stress here enough. I can't stress it enough because most people, most advisors have no idea about taxes. When you're listening to this today, there are strategies to help you reduce your taxes. There are strategies to help you have more income in a most tax-efficient way. Let us help you. That's what it's about, tax planning strategies. So pick up the phone, schedule a time to meet with us. Visit our website at maggietax.com. If you want to email us for an appointment. Just go info@maggietax.com or simply just pick up the phone, 833-MAGGIE-TAX. I know with a lot going on here, if you want to meet with us in person, we have offices on both sides of the bay. When you come in, it's a safe environment, so we keep things clean if you want to meet with us in person. But if you feel like you want to meet with us over the phone, we're more than happy to do that as well. So we have the technology in place. We can ask you some questions over the phone. You can talk to us about your goals and what's on your mind, and we can look for ways to put together a plan. That's what we call the Maggie Plan. It's income planning, tax planning, investment planning, Social Security maximization planning, estate planning, and that's why we just talked about tax planning is so important. So pick up the phone, schedule time to meet with us, 833-MAGGIE-TAX, or just visit our website, maggietax.com, and we look forward to meeting with you.